What is happening, everybody? Happy Monday. This is the Flow Show. I'm Sean McLaughlin. He's Steve Straza. Steve Straza's having a little technical difficulties today. That's why we're behind schedule. I know there's a few of you who, set your watch to what time the Flow Show starts. We apologize, but we are here now. Straza,
Yeah,
how was your weekend, buddy?
it was great. Probably not as good as yours though. I was watching the Bills last night. Happy as a Giants fan whenever the Cowboys lose, but what
Well,
did you?
the Bills looking great. It's a little too late though. They could have got a lot of help from a lot of other teams this weekend. They had three teams that were three games that were decided by a field goal in the last minute or overtime. That if it went the
Right.
other way, would have really helped the Bills. They'd be in a playoff spot right now, but nope. So
They should get a wild card though. No.
they need a lot of help. The Bills' best shot is to win the division. They need Miami to lose one more game before the Bills and Miami play end of the season. But I don't
If
know.
if they were in the NFC, you guys probably would have clinched this week.
Maybe. All right, so this is the Flow Show, and in the Flow Show, we this is fully improvised, unscripted. We give you a little peek behind the curtain of how Straza and me and the rest of the team how we come up with ideas at All Star Charts, how we put together options trades. We always used to do this just privately in our own little meetings in our own little company Slack, but we thought we'd share this with you guys, with the audience, to see if you can learn something from watching us go through our process. And if nothing else, you can see that me and Straza, we're just like you. We're just, we're not geniuses. We just do the work. We do the work. We follow a process, and that's how we get ideas, right?
And we're really going to show you how this works behind the scenes today, because as Sean mentioned, a little bit of technical difficulties over here. I only have one screen. This is usually the dashboard that I'm looking at but not showing. So excuse me if the chart isn't as aesthetically pleasing as usual, but this is TC2000 and it's really my favorite tool, and it's how I kind of employ the top-down approach and drill into these different names as we're talking. So today you're going to see this all live. You ready, Sean?
Oh man, we get to see the real secret sauce behind the Straza magic. I like this.
So listen, the last 5 days, we had that big Fed reaction, right? Last week.
Big
Uh,
time.
So I have a short-term rate of change filtering here by sectors. This is just a 5 day rate of change. Materials have actually been the best group over the trailing 5 days. And then when you drill down, we had some big news today, which is kind of buoying steel, which you see here, right, up 5% with the U.S. Steel merger news or acquisition news. But it's not just steel, right? Copper's waking up here, up 9% uh, over the trailing 13% over the trailing month. Aluminum, 17% in 5 days. Some interesting stuff here. A lot of like rebound trades. But it's really a theme for all of industrial metals, right? So here's copper. You can look at some of these names. Southern Copper Co. looks really good. So I think we're already long a couple of these names. Steel
Um,
Dynamics.
I am not in my options portfolio. No.
So here's the thing about materials. We talk about these reversal patterns, and we talk about groups like XLI that are already at new all-time highs. This is just equal weight materials. Look at these new highs, right? And if you look at XLB, which is the materials index that most people are going to look at and speak to, yep, there we go. Here's XLB. Flip it to a daily. Looks a lot like financials to me, right?
Yeah.
Like nice little base here, kind of pushing through the upper bounds at these pivot highs. Looking for some fresh 52-week highs. This will be the highest level since last summer. So I think just materials in general is a space that seems to be coming to life, joining the party a bit. So why don't we flip through and see if there's any charts that we like?
I was just gonna say I don't have any materials exposure, so I would love to put a materials name
Ooh.
on here.
No exposure.
None.
So do we want to buy a breakout? Do we want to buy some mean reversion? Because this SCCO, if you zoom out on it, I mean, these are the kinds of charts that we like to put like some leaps on. Look at this one.
I like this SCCO chart. Yeah. Let's see. I don't know what kind of options this thing has. Let's dig in a little bit.
And that's often a problem with this entire sector. right? These can be low float, low liquidity, low market cap type of names. A lot of them are ADRs or are,
Well, I'm looking
outside of the US.
at SCCO. I'm looking at let's open this up, the March and the June options. Gene, if you want to pull up my screen here. I'm looking at the March and the June options here. These are the options chains. And while the open interest numbers, which are in this column here on my screen, are not huge, if you look at the bid-ask spreads, they're 30 cents wide, 20 cents wide at the money, and even a few strikes out of the money. That's not terrible. I mean, I feel like we can get fair fills in SCCO, and if I was concerned about the liquidity, I could just keep it simple and just buy a straight call, right? Like, don't do a multi-legged spread, because that just complicates an exit if we need to do an exit. But if we just buy a call, like as I always do when I buy calls, Straza, I always size my position with the assumption that if I'm wrong, I'm going to lose everything. I hope I don't lose everything, and I'll put a plan together to try to minimize that risk. But worst case scenario, if the option goes to zero and I can't get out, I've sized the position in a way that it doesn't kill my portfolio. I'm a little bit conservative, maybe more conservative for most, but I rarely will risk more than 2% of my capital on any one trade. I usually stick closer to 1%. I know some people are like, "What are you? You're a wimp. Go bigger." But
So
I'm
long
conservative
calls,
like that.
you think long calls would be the move for this
Well,
one?
I'm looking at if I look at my chart here, Straz, Gene, go back to my chart if you're not showing it already. The implied volatility, which is shown in the lower pane here, this blue line, is near the lowest levels it's been all year. So buying calls is a edge play, right? Like the edge is in our favor. And so with that in mind, and you mentioned you wanted to go further out in time. I mean, if we go to June, which is 6 months to expiration from now, 7 months to expiration, 6 months. We could we could play for the $100 roll. We could get in for about 210. Would $100 be an all-time high? It would be, right?
Yeah. Flip to a month.
So all-time high $100 roll. I love those kind of trades.
Yeah, and we should easily be able to get there, right? If this range it makes a valid resolution here, not asking for much to get to 100, what, 20%?
Yeah.
And here, just if you flip to mine quick, Gene, this is what Southern Copper looks like. This is a weekly chart of Southern Copper, right? So then let's compare it with its peer group, just to kind of illustrate what a leader this is. We always want to buy like the strongest stocks. Now that we're kind of looking at a new area to kind of find opportunities within materials and more specifically copper, what are the other stocks in the copper space doing? This is COPX, the ETF, still needs to kind of complete this range. And then the most popular vehicle is going to be this Freeport. Excuse all my VWAPs drawn on it.
You're a VWAP junkie.
Right. So, and Freeport, if I drew a similar kind of upper bounds breakout level here, oops, you would see that Freeport still also has some work to do or kind of resolves this range. And then
I still like that Southern Copper better.
It's resolving it now. Like, that's my point. This one's breaking out, right? Let's buy the breakout. The others might look like that eventually. This one should be going on to hit targets in that environment.
Buy the leaders, right? Right now, Southern Copper is the leader.
Do you want to talk about KeyCorp or some open trades quick before we go?
Sure.
Where are you planning? We've been getting questions about this. This is KeyCorp. We kind of entered for this gap fill. It started working right away. Some of the toughest trades to manage, right?
Right.
Where are you looking to take profits?
So I'm looking at 1650 is kind of the level where I'm going to trim the position. I will sell however many contracts I need to sell to get paid back for my original investment, and then hold the rest. So the sooner it gets there, the better. That means the fewer contracts I'll have to sell, right?
Yep.
But that's the way I'm playing it. 1650 area, if and when we get up there, that would mean that we've filled this gap. We've definitively filled this gap from in March, and we've come up to what appears to be, at least on my chart, a significant level.
Yeah, right. You got that those pivot lows from late last year, early this year.
Yeah, I mean, that seems like an obvious area where we could run into at least some short-term resistance. So that's where I'll take some off. Like I said, let's just keep the math simple. Let's say I bought 10 contracts. What did I pay for those? I paid, let me look at my notes here. I paid 90 cents for these. So let's just keep the math simple. Say I paid a buck and I bought 10 of them, right? If this gets up to 1650, and oh, by the way, I'm long the 15 calls.
Yep.
So if this gets up to 1650, it's pretty reasonable to expect that those calls will be worth at least $2,
Yep.
right? And if I bought 10 of them, my investment was $1,000. When we get to 1650, if they're trading at two, I could sell I'd sell five of them. I'd get $1,000 back
Boom.
and then let the other five ride, which in that case is selling half. I'm not deliberately trying to sell half. I'm just really trying to get my original capital back. But if this thing gets to 1650 quickly, it's very likely those calls will be worth perhaps significantly more than $2. They might be worth $3, 350. Then I'll have to sell less, which is great.
And this one too, bear in mind as you're managing the exit, it did everything we wanted it to do, right? So here's key on the daily. We were watching these pivot highs from the summer, right? We got a nice coil here, and then we ripped higher right into this memory gap, right? This little zone that we're betting on filling, and then just giving back 2 days here after some, two really nice candles. Just be patient with it. Let it finish doing its work. It probably works back up to that 1650 level on the next leg. So,
You just jogged my memory with that memory gap. Is that what you called it?
yeah.
That reminds me, is this one of those charts that had one of those sexy volume gaps that you've
Yes.
been sharing recently?
Totally. Yeah.
Nice.
Been all over those.
I'm a big fan of these volume gaps. I want to see more of those charts.
Work. One I was looking at the other day, we'll just show it before we jump off here, is look at this Snapchat, right? So this is what Sean's talking about. We have this gap from 22 all the way down to, mid to upper teens. Once these areas of very little price action or price memory start filling, tend to see big moves. I mean, sure, Snapchat is super overbought, super extended right now. It's like it hasn't gone down for 2 months. RSI at 94, maybe on a little bit of weakness. Get this one as it stabilizes. It's got more gap to fill here, another 25%.
All right, I'm going to sound like JC here for a second,
Yeah.
but is Snap even a thing anymore? Like, do people use it?
It was never a thing for me, so it's
Me neither. I never used it.
hard for me to say. I think I have some friends who still use it.
I feel like, I mean, look, I'm showing my age here. I'm not a boomer, but sometimes I sound like one. I mean, I thought that TikTok kind of took the business from Snap. No?
I don't know. What I do know about Snap is in a world where these social media platforms are getting, louder and louder criticisms about how maybe they're unhealthy, a brand or a social media platform that literally by design allows you to send messages that automatically delete and disappear. I don't know, right? Who's your target audience if you're looking for a message that has to disappear as soon as somebody?
Ooh,
I don't know.
financial people, insider trading should love Snap.
Yeah, they should get rid of Slack and start using Snap. You're right. But it just, you know what I mean? Like by design, it seems like kind of first up on the chopping block in terms of, these social media sites that maybe younger people are not doing the best things on, right?
Yeah.
So,
Hey, by the way, I've been keeping an eye on the chat section here, and I see a question from Dennis, asking if we pay attention to intrinsic value. I can address that real quick. That's an option-specific question. Intrinsic value is basically, for those the uninitiated, intrinsic value is what is the value of the call or put, if it's in the money, how much of it is in the money, that's embedded value, right? So let's say if I have a stock that's trading at $105 and I'm long the 100 strike calls, right? those calls are $5 in the money. That's intrinsic value. Those calls will be worth at least $5 at expiration because they're $5 in the money. Now, he's asking, do I pay attention to intrinsic value? Not really. There's nothing I really care about because generally speaking, especially if I'm buying calls, right? Or even if I'm buying puts, if I'm buying a straight call or a straight put, I'm generally buying out of the money, right? At which point it has no intrinsic value because it's out of the money. If the stock were to expire today at today's price, that call would expire worthless. So intrinsic value is not something I specifically go after. I don't want to buy a call or a put that has X amount of intrinsic value. It's really not even something that comes into play for me. Now, we were talking about key for a second. Like if key goes in the money, I'm long the 15 strike calls, right? If that thing trades up to $20 and I'm sitting in $5 of intrinsic value, I'm aware of the intrinsic value, knowing that if the stock goes sideways and does nothing from here, let's say the stock's at $20 and it just goes sideways, I know it's not going to lose the $5 that those calls are valued because that is intrinsic value. I don't need to worry about, oh man, I need to get out of this call quickly because the theta decay is going to decay away my $5. No, it's going to stay there. I don't know if I'm answering your question there, Dennis, but it's not something I pay a whole lot of attention to, mostly because if I have a position with a lot of intrinsic value, it's because it's something that has been winning for me, and I'm probably looking for an exit at that point.
One thing I'll tell you about intrinsic value in my process is that it's always 0 when I enter and hopefully higher than 0 when I exit.
There you go. If it's higher than 0 when you exit, you probably did something right. Not always, but probably. All right. We got Southern Copper. Is there any other trades that are at the high end of your book? I like I said before, I would love to get into something in the materials sector.
You know what keeps popping up in my material scans this morning? These uranium names still.
Well, we're already in NXC. I see that on your screen.
So that one pops up as a strong one. I'm personally long the Steel Dynamics. I love it.
Just got out of Steel Dynamics last week. I finally hit our profit target. We've been in that thing since June.
Yeah, I think I'm overstaying my welcome here with this one because you're seeing a little bit of these big green candles kind of erode throughout the session already. And
hey, real quick, that NXC, let's go back to NXC for a second. Is that a materials name? I thought that was an energy name.
Yeah, so they're technically the same with coal. You know, they're energy stocks, but they're grouped in materials. It's an industrial metal, uranium.
All right, well then I guess I lied earlier when I said I have no materials exposure because I do have a position in NXC.
But it's different, right? It's like one of those groups that kind of does its own thing. It's not going to, we need more exposure to like the materials trade and the groups that are going to move with and drive materials like copper, steel, industrial metals. This is, it's like Notre Dame trade.
Okay.
Uranium.
Look, we started late. So we've gone late, and we apologize to everybody who are waiting for us to start sharply at the bottom of the hour. But hey, listen, I actually really do like this Southern Copper trade. I'm in BTU also, Straza.
Oh yeah, you like that?
Yeah, I am in that one. But I do like this Southern Copper trade. I do love that it's pushing up against all-time highs. $100 strike is on the horizon. It always tends to, not always, it often tends to act as a price magnet for no real good reason whatsoever, but because humans trade it and humans like big round numbers. And we like to call it the $100 roll, the $100 roll.
Because humans like to think in a way like, oh, I'll sell this at 100. That makes sense.
Right. So hey, I like this trade, Straz. I think I'm going to put this one on the books. I like getting into the June options. I'm looking at the 100 strike. I could probably get them for about 220 right now. Those calls right now sport a 23 delta, which is kind of right near my sweet spot. I like to buy 25 delta calls, not always, but often. Yeah, those June 100s, they've caught my attention.
So making a bullish bet on copper via the strongest stock in the group, what's not to like?
That's our bread and butter, right, Straza?
That's it.
All right. Well, hey, everybody, thanks for your patience. Thanks for going through our technical difficulties. But hey, the bright side of that, Straza, is that I saw some comments in the comment section that some people seem to really love that you're using TC2000. I think you won some new friends.
TC2000 is my secret weapon.
There you go. If you learn nothing today except that TC2000 is Straz's secret weapon, well, hey, then we've all gained something here. We've all learned something. All right, folks. I'm Sean McLaughlin. He's Steve Straza. This is the Flow Show. We'll be back next week. I promise we'll try to be on time next week. Straz will get his technical difficulties figured out. I'm sure of it.
I'm calling tech support as soon as we hang up here.
I mean, you figured out the lights last week. I mean, what else can't you figure out? You're amazing.
I'm just doing one thing. I'm tackling one thing at a time. Now we got to figure out the wires.
All right. For those of you who are into these kind of things, the All-Star Charts monthly conference calls tonight. So we'll see you there. Otherwise, we'll see you on the morning show tomorrow morning. Take care, everybody.
Thanks for joining, everybody.